Today's session is the third one in our series of basic technical analysis, and today we'll be talking about trend lines, supports and resistances. Well, trend line is a simple y equal to mx plus c, the simple equation of a straight line. Now you can see over here I have the chart of NSE Nifty, and it's a simple black line which is sloping up joining the lows. This is essentially the trend line that any technical analyst uses in his chart. It's a very simple yet very elegant and powerful as well. It is simple that it's a straight line sloping up or down. That is something that we can understand. But how can we make use of it? How useful is it? Is something that we will be looking into in this session. It's also a pictorial representation of trend. Essentially, the fact that the trend in this case is sloping up slowly, it can be reflected by the fact that the slope of the trend line is positive. So as long the slope is positive, you can expect that the candles to be on the left hand side of the trend line, so the trend is up. Well, this is an up trend line where we have a chart of over here a banking stock, ICICI Bank. How do you draw a trend line? Is you first decide on a low, which is just, let's say, the reaction low 1, and you look at the subsequent low. In this case it would be this one or this one. I've chosen this one because of the fact that in this move the prices was extending nicely on the upside. So with these two lows you can join a trend line which will be sloping up. These are the two reaction lows 1 and 2, and joining them will lead to a trend line. Essentially, prices on the left hand side of the line, and the line has a positive slope. The chart or the stock is in an uptrend till the point this trend line is broken, where prices come down to test the trend line and breaks below it. We'll see some examples. The other kind of trend lines is the one which is joined with the highs. The earlier one on ICICI Bank we did joining the lows, but in this one we have joined the successive highs, the rally peak 1 and the rally peak 2. This is a real estate chart of Unitech, where we have one high and we have a defined next high. We join these in terms of a trend line. In this case it's sloping down, and the candles and the prices are on the downside of the trend line, meaning that the stock is in a downtrend. You see over here we have a nice breakout of the trend line, meaning that prices have managed to breach above it, managed to close above it. Means that the trend line has reversed on the upside, or we can say that the erstwhile downtrend has now reversed on the upside, and Unitech has moved into an uptrend. This is a validation. So for any trend line or any straight line, you have the equation of y equal to mx plus c. So you will need 2 points to draw it. Let's take this example of Axis Bank. You have this high, so I have taken that, and you move on and find the next high. So you have taken that, and over here you have a nice sloping down trend line saying that Axis Bank is weak and the trend is down. Now what Axis Bank tries to do here is it bounces back and tries to test the trend line. Couple of things can happen here. It can break above that trend line and move up, which will mean that the erstwhile downtrend has reversed into an uptrend, or something like this can happen, where for the third time when it's testing it, it fails to break it convincingly, and then it falls again. When that happens, couple of things are confirmed. One, this trend line, which was drawn with 2 points, the third time got tested, is now a very strong and valid trend line. And secondly, when a trend line gets validated, the successive moves on the downside or on the upside are very sharp, which you can very clearly see in case of Axis Bank. It fell quite sharply. So this is the point where the third point validates it. You need 2 to draw, 3 at least, the third point at least to validate it. You can have the fourth point or the fifth point, the more the merrier actually, and the stronger and more valid the trend line becomes. So how is a trend line useful? How do you make use of it? The first and most important use is in terms of support or resistance. So if it's a trend line joining the lows, in this case this is the long-term chart of BSE Sensex, and this one trend line which held the entire bull market, which we saw from the mid 2003 all the way towards the early 2008. Now this is one trend line which had joined with the 2 successive lows and the third one, and it moved further ahead as prices drifted upwards. So it gives a decent source of support. That is, if prices come down close to the trend line, the first case is likely to find support and bounce back. If it fails to do so, means it breaks the trend line downward, then the trend line or the trend has reversed. The opposite case will be for resistances, where the trend line will be joined not with the successive lows, but the case that like we showed in Axis Bank will be joined with the successive highs. The second usefulness of a trend line is early warning signal of a trend change. The same chart of BSE Sensex, and we have seen that you have a rising trend line with these two swing lows. The third time tested, so it's a valid and strong trend line. It keeps on moving up, tests again. Fourth time, it's a very strong trend line which is holding the market for more than 3.5 years, and then it breaks. So this gives an early signal, the fact that this age-old trend line which has been holding prices up for such a long time is now under threat. And when that happens, a long-term trend which had been the erstwhile our bull market reverses on the downside quite sharply. So how do you rank trend lines? The time period or the length of the trend line is in effect, and the second way is the validity, the number of times tested. We'll do the second one first, which we have spoken of, is that to draw a trend line you need 2 points and you have a trend line, but you wait for the third point and the fourth point. The number of times it gets tested and it holds, it becomes more stronger and more valid. The time period is the time period which the trend line is holding into. For this, let's go back to our previous chart. In this chart, we have a long-term chart of weekly where we have shown that the prices or the trend line is holding prices for almost years now. So to break such a strong long-term trend line which is holding prices for multiple years is going to take some time. So it's a valid and strong trend line. However, this same chart could have been a 5-minute chart where all these candles could have been for the last 3 or 4 days. So the price action is just holding, or the trend line is just holding price action of just 3-4 days, which is not much. So a short-term trend line holding few days or few hours is very easy to breach, reverse. But a trend line which is holding prices for multiple weeks or multiple months is much more stronger, much more valid, and needs much more time to break and reverse on the downside or on the upside.